FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. It's March 28th, 2018. Well, markets, volatility. If you're the kind of person who needs to look at your portfolio every day or every minute of every day, you better find another way to torture yourself, because certainly the past few weeks, actually past month, has been nothing short of torture. Up, down, up, down, up, down. Where's it going to settle? As always, be part of the conversation. Be a part of the show. Email us, kl@kerrylutz.com, or leave us a message on the hotline. We'll play it, 914-424-4142. Well, market volatility, is that becoming the norm? Is there no longer a sure thing on Wall Street? Was there ever a sure thing? Here's Ned Schmidt, our good friend, here to discuss. Ned, welcome back.
How you doing, Kerry?
All good, all good. So what about this market?
Get out of it. I don't know which market should go. But what's happened is, Terry, and this is setting gold up as the only remaining alternative. We went through roughly 7 years of zero interest rates. Mm-hmm. And the financial system adjusted to that, just like we have adjusted. The base price of gasoline in the U.S. is probably about $2.50 a gallon.
Right.
We've adjusted that. Everybody owns an SUV. Everybody owns Facebook. Everybody owns Amazon. Blah, 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 blah. Well, then the Federal Reserve changed that policy, and they have raised interest rates 6 times. Now, that's hard to imagine for the average person that never sees an interest rate all day in his life, or her life. It's the equivalent of that $2.50 base price of gasoline going to $15. Tomorrow morning it's going to cost you over $300 to fill your gas in your car. That's how dramatic this interest rate increase has been. And while there's a lot of talk in the investment community, interest rates don't matter, these are wonderful stocks. Actually, I've heard that at least 10 times in my life. They do matter. They do matter. I mean, finance is built on mathematics. And mathematically, when interest rates go up, especially 6 times, stocks should go down. And the biggest impact when rates go up is on growth stocks. So that's why you're seeing it. That is the cause. And the catalyst is all the news items. I mean, what Facebook did or did not do did not cause the stock to go down. It was the catalyst for what was already set up. So not only do they have the rate increase, but by the end of the month or shortly thereafter, the Federal Reserve will have reduced its balance sheet by $60 billion since September. The Federal Reserve is no longer putting money into the system. It's taking funds out of the system. And those have to be made up somewhere. And the financial markets are interconnected. And so because of that $60 billion drain, they're coming out of the stock market. Not directly, but indirectly. At the same time, we got the Federal Reserve, the federal government, on a spending spree like I never saw in my life. I thought Lyndon Johnson could spend money, but he was a piker compared to this crew.
Yeah.
And they're talking about raising $300 billion this week. Where do you think that money comes from?
Trees, right?
The Federal Reserve. Yeah, it comes off the tree. I hadn't thought of that.
Yeah, the money tree.
Trees. It has to come from somewhere. So you've got everybody taking money out of the financial system. The only thing the stock market can do is go down. Well, the first thing that happens, is volatility, because people don't believe. Right now, nobody believes the stock market has wiped out $2 trillion in value. But they will come to believe. They will come to believe it. And gold is the alternative. It already is starting to shine. Year to date, the GLD is up 2%, and the S&P is off almost 3%.
Wow.
GLD is even beating the NASDAQ with all that rubbish.
Oh, say it isn't true, Ned. Stop the madness.
I'm sorry. I'm finally in fashion, Kerry. I never did anything on Facebook, and now I'm in fashion.
The good old fake book or farce book.
Yeah, and the dollar. Let's talk about the dollar for a second. The dollar rallied on the last rate increase, but it was the most anemic rally I've ever seen for the dollar. It just didn't have any macho. And what's going on is the trade deficit. We hit about $570 billion negative in January.
Mm-hmm.
Now, what does that mean? It means that boat comes to the West Coast loaded with tennis shoes and cell phones and whatever's, televisions, and after we unload the stuff, we load that boat up with dollar bills and send it back to China.
And scrap cardboard. Don't forget scrap cardboard. That's one of our largest exports to China. I think around $25 billion.
Quit doing that.
I think they're still doing it. I mean, hey, it's there's good money in recycling cardboard, right?
I guess so. You're my cardboard expert there.
Hey, well, if you can't print up money, you can always send garbage. We seem to produce extraordinary amount of that. We're prodigious garbage generators in this country.
That's a sign of our prosperity. Poor people don't have garbage. But
yeah,
what's going on is this situation is getting worse because in the U.S. we have very high employment, plus we instituted the tax cuts. So people now have more money to spend. Well, a significant portion of whatever they spend it on is goods that we import. So the tax cut is merely making the trade deficit worse. We've been through this before. This is nothing new. And that's going to continue to put pressure on the dollar. I mean, the Japanese won has appreciated over 10% since December against the dollar. So this dollar is just uninteresting. It's got nothing to say for it, and that's going to bolster gold. Those other real, let's call it a problem now, is nobody believes that in it yet. Everybody is still, despite all that's going on in the U.S. stock market, nobody's belief in that holy grail that it's an ATM has been busted yet.
Mm-hmm.
And so it's going to go till we get a pressure point. And what we will see eventually when it happens is gold will make a significant jump above 550. We'll come in some Monday morning, it'll be trading at 570. And then that will be it. So you've got to buy it now. Now on silver is setting itself up as an increasingly, a spring that'll somehow bounce. Because let's say a year ago, the major trading firms were net long, let's call it 100,000 contracts. In the last 3 weeks, 2 of the last 3 weeks, the large hedge funds have been net short silver.
I know that was a really bullish move there because the commercials are going longer, right?
Yes, and that's amazing that they have been. The commercials have been amazing this cycle. Instead of doing this wrong thing like they used to do, they're actually doing the right things.
Yeah,
but this the level of pessimism it takes for these hedge funds to be net short silver is monumental. And I'll promise you, folks, they're not that smart. They're really not.
Mm-hmm.
And they have a history of being really, really wrong. So I think that thing on silver, that's just like flashing green light. And I could see silver when gold turns. We could see some very strong moves. I mean, just having the stupid hedge funds get to a more balanced position. So we just keep setting ourselves up, Gary, for the day when the whole thing is just going to suddenly jerk upwards. But I can't tell you what Monday morning that is, Gary.
Yeah, well, one Monday, probably not that long off, Ned. But, we know it's going to happen. It's just a question of when. It's been years, but look, insurance policies, when times are really bad, are very hard to find, very hard to purchase. So better to purchase one before you need it than try to get it after the house is burning down. But what's doing with our ag sector? Seems to be really strong.
Agriculture has been doing very good on an overall basis. My agri-food price index 3 weeks ago hit a new all-time high.
Really?
And it was pretty much across the spectrum. We had some strength in the major grains, and then it rained in Kansas.
Yeah.
Kansas, for those of you, Kansas, Oklahoma, North Texas is hard red winter wheat country. We plant the wheat in the fall, we harvest it in the spring. It was incredibly dry. It was the point where we thought it was going to be a real bust. And then it got some rain. Well, the hedge funds all think they can forecast the weather.
They can't?
So what it's no more than they can forecast silver.
Yeah.
but they got 2 smartphones, Terry. And anybody that's got 2 smartphones is brilliant, right?
Yeah.
So all you got to do is go out and buy your kid a second smartphone, and your kid will be smart.
I thought that worked.
Well, the other thing that happened is the imaginary trade war.
Yeah.
Anyhow, when we the United States imposed tariffs on China for intellectual property stealing, the Chinese retaliated. And they say they're going to put a 25% tax on U.S. pork imports. That scared a lot of people because pigs eat a lot of grain. I mean, that's why they call them piggies. They eat a lot. And so that happened right in the time period when pork prices plunged. Pork prices bottom next month every year. They bottom in April. So that's a hit. So we've got 2 problems. We've got it rained in China. But I think people need to understand that the day of bountiful grains is gone. The International Grain Council, which kind of keeps track, is kind of the big mother that keeps track of all the numbers. And now, I need to point out that in agriculture, we don't work on calendar years. Calendar year 2018 for us ends August 31st. So we're talking about August of 2019. International Grain Council is now projecting that grain reserves in the world next summer will be at a 4-year low. Keep hearing about all these big grain reserves, but we've been eating them, and 40 to 50% of them are in China. It doesn't matter how big gross grain wheat reserves are, because 45% of them are locked up in Chinese bins and rotting.
Right.
But if we look,
that makes a lot of sense. Why does that make so much sense, Ned?
I'm sorry?
Why does that make so much sense that they're in Chinese bins rotting?
Well, if you put something in a bin, if you take a silo, a bin, fill it full of wheat, let it sit there for 6 years, you can almost bet some of it's rotten. It's just guaranteed. So the grains available to us outside China are continuing to decrease. And so there's no reason for grain prices to go down anymore. In fact, they may never go down again.
Right.
So that means that the ag stocks as a group should be benefit, and they will, but right now they're stocks, just like every other stock. But 2 of them to look at is as I've been talking about repeatedly, is ADM, which I still think will work out some deal with Bunge, BG. And that would create a massive and the only public grain collector in the world. The other big two are Cargill and Louis Dreyfus, and they're private. The other one is a new name because it's the merger of Agrium and Potash, Nutrien, NTR. Now, the merger just happened at the end of the year, so we haven't really seen any consolidated numbers. But here's what's going on. Is for the last 2 years, when farm prices were under pressure, farmers didn't apply enough fertilizer.
Right.
And the fertilizer pipeline has been run down to, I don't want to say bare essentials, but maybe a little above bare essentials. So the next 2 years are going to be above average fertilizer applications. So the fertilizer market is going to be better in the next 2 years than it has been. NTR also has the largest farm service retail store unit in the United States, Canada, Australia. These are where the farmer can go and buy the fertilizer, seeds, pesticides, whatever he or she needs. And that gives them an advantage over any other fertilizer company. So those are the two opportunities that seem to be right there for investors.
Really interesting. So I guess like anything else, there's winners and losers. And in the Trump economy, it's no different in that regard. We're seeing the losers, which is going to be the people who are the winners before for the past 8 years, 10 years, 12 years. And some of the people who are the losers, the working stiffs, are kind of coming out on top, aren't they?
Aren't they? Yeah, it's about time. It's about time. And well, on this thing with the tech stocks, them crumbling now, people don't realize where that causes problems. The biggest loser, Karen, is the state of California.
Yeah, their pension plan.
Their tax revenues.
Yeah.
I haven't seen the number in a couple of years, but it was like 40% of their tax revenues come from capital gains taxes on tech stocks. Mm-hmm. And so they're not going to have all those taxes.
Perhaps, and certainly all their pension plans are riding on the tech boom. And if it turns into a bust, that's going to put pressure on pension plans, public pension plans around the country. So there's a lot of fallout that can come from a tech bust. Not to mention, Amazon was going to build the second headquarters. If things head south, maybe they're not going to. Maybe they'll change their minds. A lot of things can change really quickly, right? The best laid plans. Well, hey, so anyways, you need to check out Ned's work, and you'll find Ned's work over at the Value View Gold Report and the Agri-Food Value View. If you're looking for other sectors where you have a possibility of making something, those are the places to go. Precious metals, agriculture, 80 million new people on the planet every year. And you know what? They all expect to get fed. And most of them are. So, all those things, consider it. Hey, be part of the show. Email us, kl@kerrylutz.com, or drop us a voicemail at 914-424-4142. We'll try to play it on the show, and check out our Twitter feed at Kerry Lutz. Ned, it's always great speaking with you. Talk to you again next month. Be well, my friend.
All right. Bye, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.